I tagged you in it. Why you just saying accept the tag?
I did. I don't see it on my page. I accepted it. It's not. It didn't never come up on my page.
Right, since your thing is about to die, we're not gonna role play. We'll just roll through it.
Okay, you're recording right now, right?
Oh, yeah. You ready?
Mm-hmm.
Go on. What's going on, guys? It's your girls at the Queens of Credit. And you know what we were thinking? We were thinking that we wanted to jump on and explain how credit works. Most people know you need credit. It's important. Uh, they know that credit definitely helps to make the world go round. You need credit to get approved. You need credit for ownership. But nobody really knows how it works. So Shenequwa is going to get on here and she's going to go ahead and get started as far as breaking credit down. So make sure if you know somebody that needs this help, share this post, tag your friends, because we are about to unload on you how credit works.
What's up, everyone? Again, tag and share and tag. We are excited to have you on this evening, and we're just going to go ahead and dive in. We're talking about credit, how to leverage your credit, and how to understand your credit report, right? So a lot of myths that are out there. We're going to cover some myths, and one of the myths that everybody knows is in 7 to 10 years, whatever I had is going to fall off. But that's not true, guys. That is absolutely not true, because your credit can be sold and rebirthed and re-put back on your credit report. So that 7 to 10 years is not true. Bankruptcies can be deleted.
Absolutely. Bankruptcies can definitely be deleted. Most people feel like they have to wait the 2 years, the 10 years, wait till they're out of bankruptcy. But bankruptcies can be deleted. They can be removed. And the reason why you want that deleted, because it really gives you a brand new life. Like, think about how many lenders are going to tell you no because of the story that bankruptcy is telling about your personal credit and about your life. So when you think about your credit, you have to think about what story are you telling with your credit. That's why credit repair is so powerful, because you can make a mistake and literally get it wiped clean and start all the way back over again.
Absolutely. It's same with inquiries, hard inquiries. When you go and you look for,
when you have inquiries that are basically putting you in a position to where you are applying for things on your credit, most people think that it cannot harm you. That is absolutely not true. Inquiries will harm you. That means that if you allow the cars to run your credit, if you allow different individuals, if you're not at a place of credit worthiness, then don't let them run your credit. Now, when you get to a place of where your credit is at, they'll approve you. You have to make sure that when they run your credit, that you're at that place. And so a great thing to do is when you are about to apply for something, let them see where you're at. Like, give them access to your credit monitoring, so that way they can say whether or not, hey, you know what, your credit score isn't here yet. Let's work on it a little bit, and then let's run your credit. Late payments. Late payments are definitely not okay. Remember, you are telling a story with your credit, okay? So what happens is every time you have a late payment that shows up, it will literally drop your score 35%. 35%. So what that means is the higher your score is, the greater the impact. I've seen credit scores that are like at a 760 get dropped all the way down to a 600 off of one late payment. That was 160 points. Even if your credit score is in the 500s and it drops down to 40 points, that's a lose-lose situation. It's not something that you should be willing to risk, nor should it be something that you should be allowing to really just happen. Paying charge off accounts. When you think of the accounts that are in collections, just because you pay them off does not negate the fact that at one point in time, they were bad debt. So like, even if you settle it, like if they call you and say, hey, you know what, we'll accept the 75% settlement, that's a great deal, but it doesn't delete that it's a charge off. It doesn't delete that it's a collection or a derogatory. It just shows up as an account that was settled in full or paid in full, but the account type, it's still going to be a collection or a charge off. So you want to make sure that you understand the difference when you're seeing that.
Okay, guys, importance of your credit. With having excellent credit, lower interest rates. You can get lower interest rates on your auto insurance when you have excellent credit. So if before you got car insurance and your interest rate wasn't where you wanted it to be, once you get your credit score where you need it to be, you could always have them to run your credit score so you can lower your interest rates on your auto insurance, on your credit cards as well. Employment opportunity, guys. Some jobs you have to have excellent credit, right? If you're working at a bank, you have to have excellent credit. They look at that. They look at your credit as a reflection of your character. Now, is that right? Absolutely not, because we all go through issues in life, and some of us did not know what credit was until it was too late, and we ruin our own credit. But employment opportunities, there are some that you have to have excellent credit. Right, Ashanti?
That is absolutely right. Anybody that is in law enforcement, military personnel, insurance agencies, the finance industry, all of those employers require you have excellent credit. The importance of credit, it'll give you lower down payments. Imagine walking into a dealership and getting a 0% interest rate and putting no money down. Or better yet, imagine applying for a new apartment or a new house and you're able to get that double deposit wave to where you don't have to even get a deposit, right? Or if you're going to get a mortgage, which is ultimately the goal. As a matter of fact, when you think about having excellent credit, it can be the determining factor of you getting approved for a $500,000 house or a $125,000 house. Credit is so important.
Absolutely. So refinancing options. When you are getting ready, you might have gotten a car and it wasn't at the best interest rate, you could absolutely get it refinanced. What about your home? You have your home insurance, and you might want to see what's the best rate because your credit score is now where it needs to be. You can have your insurance premium lower because you have excellent credit, guys. Credit is powerful. It gives you the opportunity to have the purchasing power because you have excellent credit. Excellent credit gets you into doors where not so good credit do not. So it opens doors that you never had before because you have excellent credit. Also, it's a great opportunity now that you have excellent credit that you can start to purchase real estate. Real estate opportunities will now be at your front door. Things that you never thought you could get, now it is a possibility to get. It's a great opportunity to buy real estate, go into investing homes, and flip it, and go from there.
So here is our diagram of what we were just saying about the credit report.
So when you think about your credit score, and you have to remember that there's so many different components that go into determining you having an excellent credit. So we're all on the road to 700s, 800s, to that club, to that elite club, that a kingdom club, okay? So when you're thinking about that, so if things are being added or deleted from your credit, it's important to know what affects it and how it's being affected. So payment history, which is 35% of your credit score, is the largest element when it comes to determining your credit score. So check this out, right? When you think about you're paying your car payment on time, if you're paying your credit cards on time, your mortgage, lines of credit, secured or unsecured, anytime you make one late payment, just one, like the credit people have no grace in this thing. You make one late payment and it will affect your score 35%, not in a good way, but in a way that will be detrimental to your credit goals. So you want to make sure that when you are on the journey to having excellent credit, you do everything in your power to make your payments on time, even if that boils down to you having to split your payments up.
The utilization rate of 30%, what does that mean? Line of credit, credit cards, you want to keep that, your overall utilization, how much you're using, under 30%. So if your credit card has a $3,000 limit, you don't want to use the total $3,000, right? You want to keep it under 30% or less. That way it shows the lender that you are responsible with lines of credit. It's same with credit cards, anything that you have to borrow from the bank. It shows that you're responsible for using other people's money.
Absolutely. So you want to make sure that those utilization rates stay under 30%.
30.
So a good rule of thumb is if you have a credit card, stay between 16 and 25%. Ashanti, what are you saying? If you have a secure card that's $200, 25% is literally like $50. That's it. It doesn't sound like a lot, but what will happen is you will watch your score start boosting 40 to 60 points. And I mean, when you think about it's not as complex as most people would think, but just because nobody taught us about it in school, it seems a lot harder. Length of history is 15%. So that means that anything that is being reported to your credit, from the time you open up that account to the time you close it, and hopefully you don't because it will drop your score, but from the time you open that account, that's your that's your credit history. So like, if you bought a car 3 years ago, that's 3 years of history that is on your credit. If you got a Capital One card 7 years ago, that's 7 years of history. That is 15% of your credit score. Now, here's the important part. Don't miss this. If you decide, hey, I've had this Capital One for 7 years, I barely use it, I don't use it, I don't need to use it, and you decide to close it, your score will drop. It will be impacted by 15% because what you just did was you just erased all of that good 7-year history right off of your credit. So that doesn't mean that you have to continuously like use it. Just do something very small, even if it's $5 or $10 a month, but you want to keep it active. So like if you don't use a card for 60 days, I've seen them close that card down and your score will drop. So you want to keep a very small revolving amount that exists on your card or on that line of credit. That way they don't close your account, you don't lose 15% as far as like a deficit in your credit, and you have good length of history because lenders, they want to see that. If you walk into a dealership and you've only got 2 years worth of history and you're like 65 years old, they're going to be like, something is wrong with that. they're going to be like, this probably isn't even legal. And so that's why you want to make sure that you keep length of history to build your credit strong.
Absolutely. And types of credit, 10%. So there are installments, which is like your mortgage, your fixed auto, and then they're revolving, like credit cards that are reporting every month, right? So types of credit, 10%, you have your mortgage, your car notes, and then revolving is anything that you're paying that the numbers change. It's not going to stay the same. So your credit cards, you use your credit cards, there are different amounts that you owe or that you have to pay. So therefore that's revolving. And revolving credit actually helps you keep your credit score up as well as installment. But you want to at least have 5 revolving credit lines, right? So types of credit, 10%.
Absolutely. And so when you think of installment and revolving, think of it more like fixed and not fixed. So of course, like your car note, that's something that doesn't change. You pay that same amount every single month. Something like a credit card, well, that's not fixed. If you max it out or if you go out and you splurge a little bit, then that's going to put you in a position to where you're not going to be paying the same thing. Increase, new types of credit. So with new credit, increase is 10%. And most people think that increase will not harm your credit. That is not true. So let's say if you go on a credit monitoring site, like a Credit Karma, Identity IQ, Credit Check Total, Smart Credit, and you look and you've got like 25 to 40 increase, that's like 30 to 60 points that is impacting your score if those were removed. So you want to make sure that when you're applying for things, once again, just to remind you, make sure it's something that you can get approved for. Now, how do you know that? We're actually going to do a live to let you know what banks look for on certain bureaus. So that way you'll know whether or not you should even be applying for those things. Okay?
Working with us. So yes, you can absolutely do your credit yourself. But if you do not know the laws and how to be consistent with it, you can always work with us. Queens of Credit, we're looking for new clients. We are inviting new clients as of now. So if you know anyone, please tag, share them in this Facebook Live, because we're doing free consultation and we are helping everyone get excellent credit.
Absolutely. So if you want us to bring it to your group, or even if you're having a Facebook Live that is based on education, maybe you're teaching kids about financial literacy, maybe you have a home buying group, maybe just whatever. I mean, we just want to make sure that we are truly helping to impact the lives of anyone that needs assistance with their credit and with understanding their credit education. If you have not done so, join the group, the Queens of Credit group. Listen, I'm telling you, it is lit. And every single day at 8 o'clock in the morning, we're putting out information, education, and knowledge and content to help you get on the road to 700. I know you see the videos, the testimonials, and I'm telling you, it is such a blessing. It is an honor, and we are humbled to be able to serve a community of individuals that need help with their credit, to help them get to the place of where God truly wants them to have. Shenequwa, you got anything to close us out with?
I just want to welcome everyone. Thank you all for coming on, and look for us. We have some things coming up on Saturday. We will be going live. Please go and register. Do you have that in front of you, Ashanti, the information?
I don't, but if you guys go to the page, and it's definitely there, and you can also register on Eventbrite. Of course, it's free, and it is virtual.
Yes. Yeah. So it's a home buying seminar.